Hi, I'm Monique Beadles, joining you at MainTrain from Brisbane, Australia. I'm passionate about empowering leaders in asset management. My latest book, Leadership Assets, is written especially for asset managers who want to realise their leadership potential and for leaders who want to empower their asset management teams. As a special offer to MainTrain delegates, I have a free sample chapter available, and I also have some books to give away. So come and see me at my booth, and I'd love to have a chat.
Have I unmuted?
Yeah, you're good.
Fantastic. Thank you very much. And thank you so much for having me today. As Martha indicated, the title is A Tale of Two Deployments. I was trying to do a little Tale of Two Cities thing throughout, and it got a little cheesy. So the theme is not as consistent as I might like, but I think you'll still get what I'm after here. So why Tale of Two Deployments is because we have Nova Scotia Power entered into the deployment of a formalized asset management approach for power production many years ago, and T&D more recently under very different organizational contexts, and that compare and contrast is the subject of today's presentation. So I'll start with a brief intro to Emera and Nova Scotia Power, and set the stage again a little bit for the presentation content, and then talk a bit about power production and what we're doing in transmission distribution, and then some takeaways around the commonalities and the learnings through those two deployments. There we go. So Emera is a team of experts focused on safely delivering cleaner, affordable, and reliable energy to about 2.5 million customers across Canada, the US, and the Caribbean. Nova Scotia Power is a wholly owned subsidiary company of Emera, and you can see there we are, one of those yellow dots. Nova Scotia Power itself is about 1,700 plus safety-focused employees, supplying about 95% of the generation, transmission, and distribution of electricity to about 500,000 customers across Nova Scotia. So we are, by and large, the only power producer of significance in Nova Scotia. There are some smaller municipalities and independent producers, but by and large, this is us. For the power production fleet, generally speaking, kind of the darker black segments there are thermal generating stations, so primarily coal-fired. Nova Scotia is essentially built on coal mines, and so those are primarily coal-fired units, but one of them has been converted to oil-fired right here at Tuff Cove in the Halifax region. We also have wind, which is represented by the kind of greenish-looking star, a fair bit of small hydro across the province as well. The age of the assets varies significantly. So some of our hydro assets are approaching, and actually I think one or two have passed the 100-year mark in the last year or two. The thermal assets are easily 40 to 60 years old, give or take. We also have some air derivatives or combustion turbines as well, kind of round out our generation fleet. So the tale of two deployments. So again, comparing how the deployment went for power production versus how the deployment continues to go for transmission distribution. And so the team size of the individual focused on these rollouts at the time. The early days in power production, we started at about 3. In terms of transmission distribution, we started with a team of about, I think, 40-ish. So not an insignificant difference. The timeline, of course, very different. Power production started in about 2010. Transmission distribution much more recently in a formalized way. Should never say that we weren't doing asset management all along. We were, but trying to do something more integrated and consistent really began in about 2017. And so the circumstances under which we deployed and have been working to deploy a fully integrated asset management approach was very different when we began both of those deployments. So we'll first start with power production. So around 2010, a number of things bubbling around, which many of you will be familiar with in industry, that kind of drove us to do something a little bit differently. So again, we had these 5 thermal stations, which are the biggest investments that require the most attention, and they mostly led their lives fairly independently as far as competing for capital funding or anything like that. Really, they were base-loaded units; they ran all the time. So, but things started to change. So we, as well as industry itself, with your service providers, had a bit of a growing knowledge gap. So we had experienced operators that were getting ready to retire, experienced engineers and maintainers getting ready to retire. We had OEMs and service providers in industry that didn't have the capabilities that they once did when these units were designed and built in the first place. And so all that led us to be concerned about the ability to sustain the knowledge that we have and looking to move some of that knowledge into process. We also were being asked by our stakeholders if we were keeping up with industry. Are you sure you guys are doing the newest and greatest? What's the best practice out there? Are there new technologies that should be helped and the world is changing so fast? And that started to get us looking at things a little bit differently as well. As I said, we're by and large the only power producer and distributor and transmitter in the province. And so we're very highly regulated, which takes the place of any kind of internal and natural competition. Our regulator around that time started to also dig deeper into our business and require more information, require more defense for large decisions, and looked deeper into our performance and reliability for the generation assets. And the biggest thing is really, to me, that their renewable integration was starting in a big way. So our provincial government at the time was really setting the bar quite high for emissions limitations on certain substances in advance of many of the federal regulations that have since kind of worked their way in. And still, for some substances, including mercury, we are still among the most aggressive in North America, and that was set 10 years ago. So we had some really stringent regulations to be looking at, which prompted additional renewable energy on the grid, wind farms being built through a government facilitated RFP. So lots of different things happening, which said, okay, well, our units that used to like to start and run all day and run for months on end weren't going to do that anymore. They might cycle, they might seasonally lay up. And look at this, we might not need them all a few years from now. We need to start looking at retirement. Well, maybe we shouldn't be investing them and running them the same way if we know that we are looking at a 5-year retirement plan or even a 10-year retirement plan. These were all somewhat new conversations, or at least renewed conversations around this time. So we looked for a way to do things differently. And so to have a quick look at what the change in utilization looks like, hopefully you can read that. The blue is our coal and pet coke fueled generation in 2005. And you can see how much that's changing and what our forecast is for 2023. This is really not an insignificant incorporation, keeping in mind that if there's anyone on the phone from a larger population base, our peak load is about 2250 megawatts. So we have the ability to bring online very quickly 600 megawatts of wind, or essentially one of our entire thermal generating stations. So we like to call it essentially a Lingan, one of our generating stations, without a whole lot of control. We don't really have a whole lot of say in when that comes on and when that comes off. So incorporating almost 25% wind load into what's happening in your thermal fleet is very difficult. So low load operation, 2 shifting, cycling, all that stuff became a real concern because that's not what units were designed to do. So we're introducing new risks and new failure mechanisms by running them that way. So again, looking to figure out what that big picture looks like with regards to the assets that we're talking about. So instead of having each of these individual stations, which are represented here by Lingan, Point Econia, and Point Tupper, doing their best to meet corporate strategy kind of on their own, in their own bucket, we looked at overlaying that corporate strategy across the entire fleet of generating assets, and in particular in thermal was the concern at the time. And so ensuring that how we approach the investment to any individual asset is consistent across the fleet, aligns with the needs of Nova Scotia Power and our parent company's strategy as well. So what began to happen is that a new language emerged. So aligning with industry standards like PAS 55 and then to ISO 55000, we started to use different language around reliability, health, criticality, risk, looking at predictive analytics, putting programs around things, seeking optimization, talking about maintenance or asset strategies and asset classes in a different way. And with that language was born, I think, the process of asset management as interpreted by Nova Scotia Power, which is what we call the asset management mechanism. It looks like and is a risk matrix, much like many of you have seen before. And so sometimes you'll see impact and probability. For us, the language we've landed on was criticality and condition. Criticality being a measure of how important the asset is to achieving your strategic goals, whether that be environmental goals, reputational goals, reliability goals, safety goals. So there's kind of a cells off to the side here that you can't see. Conditions on the bottom, again, probability of failure, essentially. So how likely is it that this thing is going to be able to meet our needs? And so a turbine for us, for example, might be a 5, and a fully redundant backup system of some kind might be a 1. And so if your turbine is in great shape, great. If your not so important system is in bad shape, still not so bad. But when you start to get into this upper right-hand corner, we start to look at mitigating risks. We're starting to get to a place where we're not very comfortable. Typically for us, if we have a 15 or more, we're starting to look at mitigating or managing the risk. Now, mitigating the risk historically for us, particularly when you had coal-fired power plants that were running all the time and had no end in sight, meant investment. It meant capital investment. And sometimes that's still the right answer, but it's not always the right answer. So we look at refurbishment or redesign. We look at additional monitoring and diagnostics. We look at operational limitations. And so when you think looking forward to having a unit retire, we've started to limit starts, for example, on a unit so that we take that load off of the unit. So once you've decided what you can do to mitigate the risk, we then go and reevaluate our maintenance strategy. So we use the term maintenance strategy. You might hear asset strategy, but maintenance strategy for us includes all the things that you do to understand the health of your equipment. So that's including operator rounds, that's preventative maintenance, that's predictive analytics, which we do a fair bit of. That is oil analysis and vibration analysis. Sometimes that's third-party health assessments, all sorts of things that we can do, testing. All that would be part of maintenance strategy for us. And so is there something now that we've decided based on the risk that we're accepting, what maybe might we do differently from a maintenance strategy standpoint? And then how do we feel about that resultant risk? Again, it's a bit of a plan, do, check, act cycle kind of thing with an asset management slant, and see if we've gotten our risk to somewhere that we're comfortable with. And so understanding the strategy, what we're actually trying to get out of the asset, allows us to right size our mitigating measure and our maintenance strategy for that specific asset. Once we've got that sorted out, we started to use another graphic, another visual to help kind of describe what it is that we're trying to do. And we settled on the asset management pyramid. And if you've ever seen a presentation by someone from Nova Scotia Power Asset Management team before, you've undoubtedly seen the pyramid, as we all have it tattooed somewhere on our person. But this is, again, a graphic, a way to describe what asset management means. And so there's a lot of language here that aligns with ISO 55000, but there's some things here that are chosen specifically because we knew that they would resonate with the audience and they would be something that individuals would be able to connect to. So at the bottom of this, we have work management. So this by and large is how we do the work. So it's our work management system. It's how we plan. It's what we do for storm response in the case of T&D. It's how we prioritize works. It's operator rounds. And this is really connected to asset hierarchy, very important. And this is really connected to the frontline worker. And you got this next layer, which is what we call reliability programs or processes and programs. And this defines ultimately what the work we do. So what do our maintenance strategies tell us? What do the reliability teams tell us? What is our critical spare strategy? And so reliability teams is a key part of this, which I don't talk about specifically on a slide, but they are cross-functional teams focused on a particular asset class. So that would be ideally a combination of maintenance, maintainers, operators, subject matter experts, and engineering personnel, understanding and discussing the risks and opportunities associated with a given asset class. And so we have, I think at this point, about 15 reliability teams across power production and T&D. And all this work, very much integrated, linked together, is telling us what type of work we should be doing kind of in this bottom layer. The operational technology layer augments and enables processes. And so is there a way that we can do some of these things better? How can we use mobility? How can we use drones? What kind of automated alerts or logic can we build into our system to then take new combinations of data, synthesize new data into something that we can take action on? The next layer is performance management. And performance management is about reporting on and being able to communicate all the outputs of these layers. And so how do you synthesize information so that it's consumable? There's a lot of depth here. There's considerable depth. And how do you bring that to somebody and allow them to be able to understand what you're trying to, what the information is telling you, what the data is telling you, and start to inform decisions on that. And so that's dashboards and KPIs, and that's asset health indicators and things of that nature. Asset planning is where the rubber really starts to hit the road. So this is understanding on an annual basis for most assets what their health is, what risks we need to manage, and how what do we have to do during our outages, what contingency plans do we have for outages, and what does our capital expenditure plan look like, which is revised on an annual basis. And ultimately, we're at strategic asset management. What's key to me is at strategic asset management is that not only does the strategy inform how we do our work in the asset management team and the processes that we facilitate on behalf of the organization, but the opposite is true as well. Output from asset management processes does inform corporate strategy. I have a bit of a slide coming up that will talk about that. So one thing about the asset management approach deployment for power production is it was very slow, if you will, and methodical. So stepwise and methodical, characterized by my little turtle guy here. So each element was added independently, regardless of the other elements. Each one kind of added its own value. But as new elements were integrated and rolled out, the value was magnified as time goes on. But what that allowed us to do is that change and churn at the operating level was minimal. It meant that monetary commitments were also minimal at any given time. There was a small team that was able to accomplish a fair bit because they didn't take on too much, and the team had a power production background and therefore was comfortable with the processes and assets that we were talking about. Resources were committed kind of as an as needed basis. I think by the end of it, team was probably about 12 or something like that, kind of after the big first wave. Lots of engagement at the plant level, lots of feedback, a little bit of secondment of resources from time to time to help move particular initiatives. So very kind of stepwise, focus on one thing, get that over the line, focus on the next thing, integrate that, see the increased benefit, get to the next thing, get the next thing over the line. So early tasks would have been launching reliability teams for critical assets, verifying the maintenance strategies for those critical assets, and then start to think about sustaining some of the programs around those assets to ensure that we could move this into the future. Visualization became a key to communicating the output. So again, a lot of depth here if you consider, so for a piece of rotating equipment, we might have predictive analytics, which are statistics-based type modeling on upcoming, on changes to patterns, which may indicate a failure is ensuing. We do predictive maintenance, such as oil analysis or vibration analysis, ultrasonic emissions analysis. We also do PMs, we also do testing. And not only the values out of those things, out of those processes are important, but the fact that you're compliant with those processes is also important. So there are many, many data points that go into understanding the health of your assets. And we didn't always have all of them available for every asset, so I can't pretend that that's true. But we took everything we could and tried to massage that into something that gave us a real good indicator of asset health, for example. So in that case, there's a lot of depth behind, a value associated with an equipment risk score. And so being able to demonstrate and clarify that information in a consumable way to allow people to make decisions and internalize what the data is trying to tell them was really important and gained a lot of support throughout. So at the end of kind of the big push for power production, we have sustaining functions, and we had a department dedicated to the sustainment of the functions out of asset management. And so to be clear, though, asset management was never something intended to or that is done out of the asset management office exclusively. We are a team of people that administers processes and programs on behalf of the organization. So it is an approach to doing work and an approach to decision making that has to be supported kind of certainly more broadly. We don't have anybody in the operations or maintenance team reporting to us. So it is by and large actually done, the work is done outside of the asset management team. But where our team's functions are in the end is designing and implementing those maintenance strategies. So for any critical asset, we want to know what those activities are that we want to do and make sure that they're consistent across the organization so that we're comparing apples to apples when we're looking at mitigating risk and managing risks. We manage programs. So that's the scope of the programs, that's the financials, that's the recommendations of the programs, that's the management of data. So one good example there would be, we have an RBI program for our oil assets, so tanks and piping. And so risk-based inspection, again, has a lot of depth, and we manage and oversee the activities under that program on behalf of the organization. Ultimately, repairs and changes, et cetera, are executed in the field, but we kind of wrangle that on behalf of the organization. So we measure and report. To think back to that information layer, we try to squeeze information and massage it and synthesize it in such a way that it's providing data points which allow the organization to take appropriate action. We should continuously seek improvement. So we are always looking. So that's RCAs, root cause analyses. but it's also 5D committees where we are, or in continuous improvement committees where we're looking to do better in a certain area. We evaluate health and risk and develop mitigation plans. So again, those are typically taking place within the reliability teams, but we facilitate those teams and we make sure that they've got the right participation and that the information out of those evaluations make it into our capital plan if that's where it needs to go, or into our operating plan, or wherever the information needs to go. And we support strategic planning. So understanding what the organization needs of our assets means that someone has to think about what sustaining costs might look like, what might be the significant investment required to achieve that target over time, etc. I think, yes. And so this is a bit of a visual to try to explain that. So our enterprise asset management division, so we have a core kind of team of people that deals with the stuff on the other slide, but within kind of our group at large, we also have the team that looks after planning, the kind of bigger picture generation planning and distribution and transmission planning. And so they're looking at, the cost models, but also ensuring compliance with policies and regulation and climate adaptation and what the performance standards are requiring of us, and telling us, okay, in order to meet these targets, this is what we need our assets to do. What the asset management folks get to do is say, okay, in order to do all these things, we think this is what the investment in that operating profile looks like for the next number of years. And we feed that back into that team. And it's very iterative. There are times when we feed back, I should say we, but the asset management kind of core functions feed back into the planning cycle. And the planning team says, I don't think that's our optimal process anymore. That changes what we thought our assumptions were, and we'll reevaluate that with that new information. So we are informed by strategy, but we also inform strategy, which has been a tremendous value to the organization. So some signs of success, I will say, is we have been able to convert some knowledge to process. We have been able to sustain performance in light of very changing operations. We have, I think one of the biggest benefits is that we have been able to produce rigorous, defensible, risk-based decisions very consistently, which gained a lot of the trust of our stakeholders. So that means that our stakeholders, including our regulator, for whom we have to ask pre-approval for all capital investments over $1 million, used to be $250,000. So you can imagine the amount of work associated with that. If you work in this industry, it doesn't buy you much. They stopped asking how we made our decisions. They understood that there was rigor behind it. It's never perfect. We will miss some things, absolutely. But there was a diligent, rigorous, consistent approach to how we evaluated risks. And so it changed the conversation altogether. And we no longer think about how you made the decision or how you identified the need, and became more about what you decided to do about the need, which is absolutely where you want to be. It's a fantastic conversation to have with your stakeholders. We have more consistent risk-leveled capital plans so that we understand the risks across the fleet much more consistently. And again, we have defined maintenance strategies for a lot of our critical assets, better access to data for internal and external folks. We don't lose recommendations near as much from various inspections and et cetera, in large part because we own a lot of the significant programs now centrally, which means we can make sure that the information and the results of activities in those programs gets held somewhere and is not lost. We've also been able to improve compliance in a few areas, particularly operator rounds, which would have been a paper-based. Now that it's digital and measured, we were targeting, I think, something like 80% compliance, and we're regularly over 90% compliance. From the transmission distribution side, very, very similar strategic drivers: growing knowledge gap, due diligence, highly regulated, and then we have a different burning platform. So again, we're about 7 years later. We are looking at increased distributed energy. We are looking at, again, the challenges of integrating the renewable from a grid standpoint, a distribution transmission standpoint. And we're also starting to see the effects of climate change and what that could mean on our transmission distribution assets. And to demonstrate that, this is a bit of a graph showing the cumulative hours of wind gusts over 80 kilometers an hour. So 80 kilometers an hour is our limit for putting people up in bucket trucks. And so knowing that the average hours that we're seeing that kind of wind force, that kind of wind speed, has been regularly going up, which is presenting new challenges to us. And that's just one, of course, element of climate change. But there were some really, really big differences in transmission distribution. So whole, obviously, new set of assets. So these are not the same assets that we're used to looking at. Different systems, different considerations. So there's less variation in the assets. They're less complex. None of them rival a steam turbine. But there were very little system or processes that were used in that part of the business that aligned with power production use. So they're different work management systems, lots of different kind of variations like that. So lots of new learnings for us. Around this time as well, we were having discussions with our regulator around performance regulations and what the demands would be to report on with regards to performance and what the targets would be for performance on the distribution side. Obviously in transmission distribution, particularly distribution, of course, significant public visibility. So a power plant can trip and you don't lose necessarily, your customers don't lose electricity. You have one distribution line go in a highly populated area and you're on the nightly news. And so that public visibility and the kind of immediate response was very different for those of us who were power production focused. Geographic area, also a very different challenge. So we have hydro units across the province, granted, but the sheer volume and distributed nature of the distribution assets is a different type of complexity. So it's not a complexity from an asset perspective, but certainly from a system-wide perspective. And so optimizing productivity and the dispatch of resource and how you incorporate the customer responsive and customer request type work into that mold, which you don't have a whole lot of foresight to, was something that we didn't have to really deal with in the power production side as much. And so work prioritization continues to be an ever evolving kind of discussion here. But ultimately, we said an asset's an asset. The philosophies and by and large, the language we had used to create the foundation for asset management for power production remained the same. There was nothing new there. We just needed to understand the failure mechanisms and the new risks, but the model held true. So the model was flexible enough and the approach was comprehensive and asset agnostic enough that really we just went back to basics and again started at the bottom up, looked at work prioritization, understanding the assets and the risks and what process exists today. So what was really different though, and again we don't have my turtle this time, we have our hare, is that many initiatives were moving in parallel. So we're a much bigger team, and so instead of taking our stepwise approach a little bit and kind of creating that value incrementally and being a little bit stealthy, we've got many things kind of moving at the same time. So new asset classes to develop strategies for, new technologies to be connecting to and data sources to integrate, new processes to understand, simultaneous draws on horsepower and funding because we weren't doing kind of one thing at a time, or I don't know if we were ever one thing at a time, but certainly a few things at a time. And all the while still trying to get the output out, which is let's look at this asset level risk, but all these foundational items are still very much in a state of development. So we also had increased visibility. We are a significantly bigger team and a dedicated team. We are now 40-some people strong, kind of dedicated to the design and optimization of maintenance strategy and our asset risk management. But with that increased visibility becomes increased expectation for pace. We now have an executive member, which we didn't before. And so pace and scrutiny, make it go faster. Can't you get this done that you did in power production? That type of thing is a little bit more prevalent this time. And it's a different type of resource challenge. So before we maybe didn't have enough resources when we wanted them. This time we may have more resources, but we did augment our team with subject matter experts from the T&D side of the business. Most of them did not drop their previous duties to focus on asset management core development. Which is great because they come with a lot of depth and knowledge, but it also means that operational concerns can still get very much in the way of developmental areas. And the legacy asset management team, so those of us who were here longer, and there was those longer than I, are still sustaining as well those programs in support of power production. So we're trying to keep the boat afloat and keep sustaining what we've built that has proven to be successful, while also at the same time trying to take our new members along and learn from them to create new programs to sustain for T&D. But this time around as well, the end game is a little more understood. So we do have a mature vision of how it can work and where effort is best spent, what integrations are the most important, and where to focus our energy. Visualization again became very important. So this was at the time, now this is probably a year-old slide, but it still looks good. So this was at the time our risk profile for our distribution assets in particular. And so you can see there's areas of red, which all of a sudden leaps out at you in a way that it never would have before. So we say, okay, well, we have some risks in this kind of centralized area of the province, in the central north. Maybe we knew that, maybe we didn't, but now it's there, it's consumable. But as I was saying before, there's a whole lot of depth behind this. There's a red line that has so many lines underneath it to describe how we got at that. There's also some purple, and purple is saying, I think this is undefined peak load. And then similarly, this is a similar visualization for our substations at the time. We had lots of purple with unidentified condition or risks that we weren't really sure how to quantify. And that's telling in itself as well. So again, this is early days. We've augmented our understanding a fair bit and have more information. I would expect, I don't think I've seen this actually in the last month or two, but I would expect that this looks a little bit different now as we've been able to address some of the higher risks and also understand them a little better. But being able to show this and have people say, oh, okay, well, at this time, there's not a lot of greens there. And that's saying, there's not a lot of substations that at the time, we felt really, really good about. And that's telling, and that's important to know. So signs of success for transmission distribution. So much the same. There was a lot of work to understand the risk in the backlog. So what's in our work management system that's not getting addressed? Because it's such a customer-facing type of world, more so than power production, it's very easy to always prioritize customer work. But reliability work ultimately is customer work. And so shifting the thinking on that and understanding, putting that lens on what's in the backlog can really help inform our future risk. So again, greater understanding of health and risk at all levels, so both at the operational levels, but also at our management and executive levels as well. We do have a much more comprehensive and consistent approach to capital plan. So much like in power production, where there would have been a plant by plant kind of putting your hands up, here's what I think I need to do this year. We would have done the same thing across T&D in the regions, but the right sizing and the levelizing of risk across the regions didn't necessarily happen consistently. And now that's much better. Lots of digitizing of information and integration of systems so that we're out of spreadsheets, we're getting off paper, all those types of things that are key to being able to trend and do any kind of long-term analytics. Recommendations, much more better managed, so we don't lose the flag that something's amiss over here because it wasn't integrated into this system. Digitization of data acquisition and measurement of processes. So again, compliance and ensuring that we're keeping up with our processes. And this geographic visualization, and it was done very manually early on. It continues to kind of tweak and become more automated, but really, really telling in a really quick and easy way to allow people to see the risks that they're managing. So a tale of two deployments, the same but different, which was the best of times, which was the worst of times, as it were. So was still and stealthy best, was fast and more visible and better resourced best. And so I think it depends on a lot of things. So what is driving your organization? Is there a timeline you're trying to achieve? What is the clear goal? What are you actually trying to get to? How ready is your organization for the change? I would suggest that the power production time, at least organizationally, structurally, we weren't looking for a big change, but that was different. We're ready for the T&D to kind of commit people in a bigger way. Does the organization really understand what it means to have a fully integrated asset management approach? Do we need to educate a lot? Will there be a lot of selling, or are we ready to kind of hop on in? And how lofty are your goals? Do you have a couple of small things you're really trying to accomplish, or is there something much bigger at play, and do you have that sorted out? And how visible is your organizational support? You don't necessarily have to have it at the highest levels. We'll talk about that in just a little bit. But what are they willing to ante up? Is it time? Is it resources? How are they willing to support you? So when I thought about the two deployments, there were some things that were different. And you can see that kind of in the blue and the orangish. So in the power production, low visibility, and T&D high visibility. Executive leadership was existent when we were deploying T&D, when we had a larger team, all that. But we also had sustain existing. In the power production deployment, we were smaller, but had less operational duties and less to sustain because we were still very much in development mode. But what was common and really stands out is that there was a burning platform for change. There was a reason that now was the right time to be doing something. We have never had an organizational asset management level policy, and we'll talk about that briefly. Field level champions existed and continue to for both. So there are people within the organization and the operations and maintenance areas that are there at the table and participating and feeding in, and you really need that. They sell it to their colleagues and they see the benefit. And under neither one of the deployments have we had a mega project. So we haven't selected, for example, a large service or technology provider that was expected to be a kind of a fulsome solution. So as I said, yeah, timing is everything. So what's the burning platform? Why are you doing it now? Kind of thing. Organizational support. One of the comments I wanted to make there is that it may not be explicit in your organizational structure, and that's not necessarily a bad thing. So when I think of the power production deployment, we had very visible support in the power production operations world, and that really helped it along. We didn't necessarily have an executive member, but we had the executive member who was being mostly impacted right there at the table, kind of supporting his team and motivating them to engage. On the transmission distribution side, we are much more visible. We're a bigger team, and we have that level of support. But you may find big supporters within procurement. You may find big supporters within IT. There's engaged people everywhere. Policy may or may not exist in your organization, as it does not here. We've drafted one a few times. We've talked about it, but we haven't actually had it approved and launched yet. And ISO 55000 will tell you that's really important, and it can be, certainly, if that's how your operation, if that's how your organization kind of really develops change. I would argue at this point we could have one, and it might be a benefit because you have that visibility, that operational commitment, the organizational commitment to the asset management approach. At the time of power production, it may have been detrimental, and that is if we were being slow, we were learning as we were going, we were taking smaller steps, and to have that policy almost hanging over you may have made it seem like we were pushing our way into spaces with a small team of 3 trying to do some pretty high level stuff. I don't think it would have provided a whole lot of value for us at that time. And so, again, organizational support comes in many forms. And the other thing, as I was saying, is we have had no mega projects. So we're a fan of saying we're technology enabled, not technology driven, which means we design our processes, optimize what we have, look for those gaps, and then we may seek technology to try to fill those gaps versus looking for a technology solution that doesn't necessarily fit our processes. So optimize what you have. Those are some of the common elements between the 2 deployments. I talked about most of these kind of as we went, but keys to success, I believe, across both of the deployments, which again have proven valuable for the organization, is start with that foundation, understand the assets you have included, what are the key processes and systems and stakeholders that need to be engaged, and make sure you have that clear end goal. We've talked to organizations in the past who are just all about the data, get the data with no plan to integrate the learnings from that data, or even how to interpret the data such that you get the learnings out of it. And so we've always been very purposeful about what we go after and why, and have an end game and a use for that information. Celebrate success, much like any change. Go after that low-hanging fruit, build momentum and organizational support by showing some progress. It is a journey. It is not a project. It is not, again, something that happens overnight or that is executed by a small team. It is an organizational commitment. And so gain support for those longer-term activities by celebrating successes as you go. Find and engage your champions, as we talked about. So they can be frontline, they can be in procurement, they can be all over the place. But make sure you keep them engaged, make them part of the process, find ways for their input to influence what you do, because ultimately it doesn't exist but for the core assets that you're supporting. Visualization has been very important. So they may not look so pretty anymore, but that at the time, the asset management mechanism and pyramid we looked at earlier, they were key to every presentation, every engagement, every workshop with anybody for many, many years. And we've gotten away from that a little bit, but I would argue it's still really important to get something that people can relate to and they can internalize and say, okay, I see what that journey looks like. I see where we're headed. And then similarly, there's so much depth of information that can go into this little data point, this little risk management, this little number. You communicate the 16 and nobody knows, where that 15 comes from. So the visuals really help kind of consume a lot of complicated information and present it in a way that can be easily understood. The depth is there. If you've done it right, the depth is there. You always have it if you need it. And use what works. So optimize current systems. Technology for us is never the end game, but it is an enabler. So get your process, figure out where your gaps are, and then use that technology where it makes sense to enable a better solution. Oops, my apologies. So I went from, I guess, classic literature into a choose your own adventure book at the end. But whatever approach it is you choose, start with that strong foundation and strive to the top. whichever path makes sense for you and your organization. And hopefully some of our learnings were helpful for you. Thank you very much.
Excellent presentation, Erin. That's a lot of work in 11 years. No, I just thought it was excellent. I'm going to try to fit in one question. And if anyone has any other questions, go to Erin directly on FeedLoop in the chat there. Have you considered going for ISO 55001 standards certification?
We have a few times, actually. And in fact, we have one of Canada's few ISO 55000 certified assessors on staff. We've done a few. So far, we've striven for alignment. But we haven't looked at certification. There are costs associated with that, and at this time, we haven't gotten to the place where we believe the costs outweigh the benefits. So the organization is seeing a lot of benefit from the approach as it is, and it is something that we do continue to revisit. Yeah,
well, definitely looks like the alignment is there. Great, thank you very much. Just because we're short of time, I just want to, thank you and remind everybody once again to, you can find Erin on FeedLoop, and I think there's probably some burning questions there. But we're ending the day. I wanted to remind everybody that we're ending the day with an exciting panel. It's titled "How Asset Management Contributes to Reliability in an Unreliable Times," and it will be a truly global panel session with our close GFMAM associates. So please hang around a little bit longer. Maybe get a hold of Erin in between those 15 minutes and get ready for the panel session to close out our day. So thanks, everybody. And thanks, Erin. It was excellent.
Thanks, everyone. And apologize for going a little long there. I couldn't, so apologies. Thought I had a few more minutes.
Yeah.
Thank you.
Okay, thanks.